Hello, this is David Liggitt with Data Center Hawk. This is the Hawk Podcast. I am here with the one and only Mike Netzer. Mike, hello.
Hey, good morning, David.
How are you?
My belly is full of Chick-fil-A, as is yours, from our weekly office bet, so I'm ready to go.
That's right. It's go time, and we're excited that you're joining us. If this is your first time listening, Mike and I do these podcasts. There's quite a few of them online that you can go check out. But this is all about the data center industry. Our site, datacenterhawk.com, is a subscribable platform that if you're a data center investor, provider, user, vendor, consultant, it's a great place to grab data to help you make better decisions in the space. And that's what our business is about. We've been doing this now for over 10 years, got teams here in, obviously, the U.S. and then internationally. So wherever you are, wherever you're listening from, we're glad you're here.
We have people looking into it.
our best people.
Our best people looking into it.
Mike, we are on a tear lately since 2025 has begun. We've done a number of podcasts.
That's right.
But kind of maybe highlight what we're talking about, and then we'll dive in.
Yeah, so if you didn't catch the last podcast, it was about powered land. And when we talk about the development of data centers, it's kind of land, powered shell, and then turnkey data centers. So today we're talking about powered shells.
Yes.
And this is why I think I'm a big analogy guy, David. You know this. You never see those videos like on YouTube Shorts where they put like a candle or something in like those hydraulic presses.
Yes.
And they just press down, and at some point stuff just goes out, squirting out everywhere. Yeah. That's an analogy for the data center industry, where the core markets, there's so much pressure in the core markets that it is spreading everywhere. Another analogy, I was having a conversation with a tax guy at a soccer game last night, and he was talking about how to avoid inheritance taxes. He's like, you can just tuck it in different places. You can tuck it into a Roth IRA. Anyways, I think there's a lot of tucking in going on in the data center space right now of geographic differences and just different approaches to development. And powered shell is a key part of that strategy.
Yeah.
So let's talk about kind of where the demand for powered shells is, how we've kind of got to this place today, and what does powered shell development look like?
Yeah, and the environment that we're in today too is a lot different than it was 3 years ago, let alone 5-10 years ago. When powered shells started to be a thing, so eloquently said. Yeah, I mean, so 2007, 8, and 9, historically, these buildings, were built to basically meet the demand for like enterprises that historically had built, owned, and operated their own data center, but maybe didn't have the capital to go out and do that today, or were just looking to do it a little differently. So there were think of, at the time a building like this would be 150,000 square feet, the shell, that would be the size of it. And it would be an area with like the right setbacks and security and all that stuff, but it would give the end user the ability for them to come in and lease the shell on a square footage basis, which we'll talk about here in a minute. But that was the world that we're in, and not many of them got done because most groups really 2007, 8, 9 started trending towards, and even into like 12, 13, 14, trending towards co-location, right? We don't necessarily want to, we're an oil and gas company, we're a bank, we're a technology company. We're not we don't do data center infrastructure. So we need, we'd rather go to lease this capacity and just bring our servers in than actually, bring the generators and equipment, UPS systems, all the things it takes to build a data center. So fast forward to today. So, I think everybody knows this, but just in the last couple of weeks, Amazon announced their $100 billion this year. They're going to continue to spend in the data center space. Microsoft, $80 billion. Google, $75 billion. Meta's like $60 to $80 billion. So these are just 4 companies that, even in the midst of some ups and downs with AI models and all that stuff, are still very bullish on the space. And so to your point, you use the candle squishy analogy.
Yeah. The pneumatic press analogy.
Yeah, can we edit that? Your candle squishy analogy. Basically, like, this is another form of development. And so if you're in the space today, you certainly understand this. If you're getting into the space, this is kind of the next step from the powered land side of things, which you mentioned. I'm glad you said that, like the land, powered shell, turnkey. If you're new to the industry, that is a very simplified way to understand the development process. So we're in the third, land, powered shell, turnkey. We're in that powered shell phase. And this is an area that we are seeing more and more people want to play because they can, and it's part of kind of like where there are more opportunities today than there might have been before. So let's define what a powered shell is.
Let's talk about when you say powered shell. What is it? What's included? What's not included?
Yeah. So typically, this is the, it's the site. It is the power to the site. Typically, it's like there will be fiber providers close by most of the time, and this is the actual physical building shell. Typically, this is like a hardened shell because you're going to have the IT equipment and all the things in it that you need to protect from a data center perspective. So it's not just like an industrial building. This is a building that is designed to house data center infrastructure. But what it is not is all of the additional UPS, generators, all the systems it takes to run the building. And so it creates, so there's a different financial model that an end user would look to lease with that than they would a turnkey situation. And so, basically the process, you go buy, someone goes and buys a site, they get the entitlements, they get the power, the fiber in place. Not easy today, but it's part of it. And then they build a shell. Now, typically the operator of this will be the person that goes into it. So the end user that goes into it. Historically, if you're in a turnkey data center, most of the time the operator is the data center provider,
the developer, whoever built the building is going to run it.
Yeah, or the data center operator. Makes sense. But in this situation, it's typically the group that the one that is leasing the capacity is the one that actually operates it, and that's one of the advantages that the powered shell provides to an end user that maybe some of the other turnkey or multi-tenant data centers would not. And so, just to understand the financial model as it relates to like what is the difference between a powered shell and a turnkey site. Basically, a turnkey data center, you are leasing the ability to use the infrastructure. So the UPS, the gens, you have a reserved amount that you can use, and that is priced on a price per kilowatt per month.
Yeah. Access to that.
That's right.
Access to all those things you just described.
Yeah, you're paying it whether you use it or not, and the electricity cost is on top of that, which we don't need to get into. But for those that are like getting into the space from like the other real estate asset classes, this can be kind of a mystery to them because if you're in the office, industrial, retail, like all those commercial real estate asset classes are like per square foot basis, and then you kind of bring this whole like per kW per month pricing model in. So just to understand that can be a challenge. So that is a turnkey model. The powered shell model is easier to understand because it aligns with the other types of real estate leasing. So this is typically a price per square foot annually, most markets, price per square foot per year that you lease, and you obviously have access to that building. And then as the end user, you bring in your own UPS systems, your own generators, your own liquid cooling, or whatever it is that you are using to operate the building. You would bring that in, and then you go operate it.
Yeah, and so the benefit to the end user is flexibility.
Yes.
What are some of the other reasons that a group might do that?
Yeah, absolutely. One is speed to market. So there are situations where, and really, we don't see a lot of like speculative powered shell building today. We see getting the sites ready to build. We see, even like some, I would say like pad ready sites. But when you start to put the vertical walls up, you really have to commit to a design. So even just getting the site ready, which we talked about on the powered land side, that is it's a speed to market advantage. That's one thing. Number two, it's a capital, side of things. So some groups might not want to own the data centers themselves. They might not want to go build and build it, own it, and operate it, but they do want to bring in the infrastructure and operate it themselves. So that's an advantage of it. It can be, typically you can have some more design flexibility. So it gives you as an end user potentially the opportunity to turnkey data center. The design has already been
you get what you get, and you don't throw a fit.
That's right. That sounds like
another parenting advice.
A great parent.
There.
That's right. Gosh, man, we were giving
that's actually terrible parenting advice, by the way.
Sure.
You should work with your kids, by the way. Well. So I think historically, powered shells were pretty geographically limited to Northern Virginia.
Yes.
And really kind of there was one main end user who was doing a lot of those deals. In the last probably year or two, we've seen that spread both geographically and the number of groups that are interested in leasing those powered shells.
And I think it speaks to the power constraint that we have. speaks to land control. Like as an example, if you're a data center operator now and you have control of land, and that data center user is interested in the space, because the power constraint is like it is, you have really the ability to determine, what offering you want to give, maybe a little differently than you did in the past. So there are some groups that, some end users, there are end users out there for sure that all they would want to do is powered shells if they could. But this is a good note. The return differences on a powered shell versus a turnkey are different. And, there's different risk associated with turnkey. So there's different rewards for that. The powered shell is, it's not easy, but it is an easier path.
Easier, yeah.
From a developer perspective. And so, but there are some hybrid approaches right now. I'll give you a good example. So there's a couple of requirements that we've seen in the market, pretty large, that, the end users comes at, hey, we want to do only powered shells at this site. And the developer or the data center operator said, well, we only want to do turnkey. So what are we going to do? So there's been hybrid models where a group will, maybe take 1 or 2 buildings in a turnkey perspective, and then, have 5 or 6 buildings on a powered shell standpoint. So we're starting to see that more. I think it depends on who the provider is. Do they want that type of a deal? Is that kind of built into their pro forma before they bought the land? I mean, there's a lot of moving parts to that, but I think that's something that'll be very interesting to watch, is how many of these deals moving forward are strictly turnkey, strictly powered shell, or somewhere in between.
Yeah, I think one of the things we talked about in the PTC wrap-up pod is the desire or need really for increased flexibility. And this is one of the levers you can pull to do that. But specifically around the design, where groups are going, we're not really sure what design we will need.
Yeah.
And we'd rather own that kind of mess or uncertainty ourselves than try and write that into a turnkey lease that may change. And again, you can amend these, and that's not fine. It's just one more thing that you've got to then go renegotiate. If you go, we wanted 60-40 air to liquid cooling, and now we want it 40-60.
Yeah.
That if you do a powered shell, you have all the control of that.
Yeah. And if you're a developer in the space today, you really need to understand, before you do anything vertically, you really need to understand the design implications and the changes that are happening right now with about 15 different users that are out there, because those are the ones moving the market. Those are the ones that will do these deals. And if you're going to build anything speculatively, like vertically on a spec basis, you really got to understand, like, hey, do we have the right size of footprint? Do we have the number of stories it needs to be? Data centers are getting taller because you're having, land and power issues. Do we have a design that can accommodate, both air and liquid cooling? And not, they're not really doing the design, it's the shell, but do we have a building that can accommodate that? And those are, that's very real. We know of a number of deals that are getting changed. Hey, we've signed this lease. We're going to build this 100 megawatt. This building is going to be 100 megawatts for the end user. And then the user comes in halfway and says, hey, we thought it was going to be 100% air cooled. It's not. We need it to be this, or we need to shift the design here. And so, the design changes are very real right now. And if you're going to play in this powered shell world, you really have to understand that.
Yeah, I think from a developer side, it can be a lever that you pull from a capital allocation standpoint, because there's different costs associated with turnkey development versus powered shell. Maybe turnkey is kind of maybe in the 12 to 13 million bucks a megawatt, versus powered shell could be maybe as low as 4 to 5, maybe up to 7 or 8. And so if you're just thinking capital allocation, again, what we've seen, I think we did this conference in New York last week about private equity around data centers. It doesn't seem like there's a real capital issue, but it is. The challenge is allocating the capital very granularly to different groups that spreads risk differently. And I'm not going to say the phrase you think I'm going to say. I'm going to avoid it, that specific buzzword. But the capital allocation piece is an increasingly scrutinized function of data center development. And this is one lever you can pull to change those dynamics.
I would also like to say, if you have a desire to get into the turnkey space, the idea that you're just going to show up day one and be a turnkey data center developer, it's pretty rare today.
You might as well ask me to make an iPhone right here.
That'd be amazing.
I could get you the case.
That's right.
But to your point, that's another reason that we've seen this powered shell trend advance.
It's the gateway drug.
It's the gateway drug.
I'm not even sure. It's terrible. No, all I mean is we've been doing this a while now. Like, we just don't see that a lot because it's so capital intensive. The expertise needed to pull it off is huge. You've got to convince 15 to 20 users that you can do it and you can perform operationally. They don't want to be your test case. So this is a way that you can almost like build trust over time to, if you can do this well and you have a program that you can run over and over again, it allows you then to go, potentially into the turnkey side. But that takes a while. That's a 5-year process at least, so those that are long. Getting in the space. I was talking to somebody yesterday and I was like, it's just, this is like the people that will really win are those that are going to play the long game. So all the people that are like in the space that are thinking, hey, we're going to be here for 2 to 4 years and get out, good luck. And I just mean that way because it's not easy. I promise you, if you find a site, we talked about the other day, people have already looked at it. People that have been in the space a long time have already looked at it. So it's just a different world, but this is an opportunity. We've seen really successful industrial developers, companies that are large scale, that have sites across multiple regions in the world, get into this type of development. And I think you'll continue to see that. I mean, and it makes sense. They know how to build industrial sites. Mm-hmm. Those industrial sites typically have a lot of power. And so there's obviously some shifts, but that's reasonable to me. Those groups that do that makes sense.
It's a very natural extension of their existing
absolutely business. The challenge I think a lot of groups like that will have moving forward is like they have a portfolio of land in different markets and they're really trying to capture, hey, we already have this land. What sites within our portfolio can we build data centers on? And that serves you. That's definitely interesting, and if you have the industrial expertise, you can get deals done. As it relates to then you got to figure out, hey, can we go buy additional land for that data center development? And some of those groups I think are a bit hamstrung by that, which is we need to check our current portfolio before we go extend, before we go buy land other places. But that being said, I think that those type of groups you'll see be in the space and be successful if they can like develop the relationships. They certainly have the expertise. And they'll bring team members on, I think, with the data center experience and background that can help with that.
Yeah, and there's been a handful of groups that were not historical industrial developers that have gotten their entry into the market through the powered shell. So to your point, it is a bit of a gateway drug or a way that groups can prove their ability to the market. Yeah. And so again, there is opportunity there for sure. And that, to your point, that feels like the most easiest is just powered land. Yes. And there's groups that will be interested in that. But you get an additional return on your investment. It may make sense to go vertical, but to your point, the turnkey is a much bigger leap than a powered shell. Yeah, so there's certainly opportunity. I think we'll see it continue to proliferate, as it were. Yeah. Regionally, you mentioned all the investment that from the big hyperscalers. Sylvie, our new analyst in France, just posted in our Slack chat like a $200 billion investment in France for AI. So it's coming.
200 bill.
I'm sorry, 200 billion euros.
Okay, thank you.
I should clarify. Still a lot of money. Yeah. I don't know what the exchange rate is. I think that's actually more in dollars.
It probably is.
Someone can fact check. We got a research team that can fact check that. But we think it will.
Please don't. Don't spend your time on that. Yeah, we're okay.
Pump it up at the bottom. So it's not just a U.S. story. Yeah. It's going to. I think we'll see it continue to evolve. Internationally.
Yeah, and I think if you think of the 4 categories we talked about again, the land side of things, when you go to power land, that number drops off, and of people that can actually pull it off. And then from powered land to powered shell, the number really drops off, because that is a whole different commitment. Now you're talking about, you've got you essentially aren't just selling a piece of property. You now have an operating lease with somebody. And that is a much different level of commitment than we'll see. Let's talk real quick about the markets that we see this in, because some questions might be, hey, are there geographic markets that favor the powered shell versus that don't? You mentioned Northern Virginia. That's where we historically have seen one user prefer that model. I think now it's starting to spread out to other places. This is more just, hey, can you apply this product and this model to other places? You certainly can. I don't think there's places, certain geographies right now that are like, hotter than others related to how powered shell development is happening. It's more just where are the sites and who owns them and what are their capabilities.
Yeah, so I think in our kind of data set, I think we have 130-ish like powered shell deals that we've tracked. And about 100 of those are in Northern Virginia, just to put that into context.
Yep.
And again, I think to your point, we'll probably see that ratio shift over the next few years.
Yeah. So kind of wrapping up, like who benefits from powered shells? So the end user, I think, you have a speed to market advantage potentially. You have operational control. You get to bring in your own, systems and then run the building, which is certainly an advantage. Data center operators, this is a new revenue or a different revenue model than turnkey, and it also provides like the hybrid leasing side. So if the data center end user is asking for you to be flexible, this is a way it gives you the opportunity to do both turnkey and powered shell. And to establish credibility, and I think on the developer side, it's a lower risk entry into the data center market. It is the gateway drug into the turnkey space. I can't believe I'm saying that, like just so nonchalantly.
The deals have gotten so much larger. Like you would never split a 30 megawatt building into 15 powered shell and 15 turnkey. Yeah. But if you're doing a 500 megawatt deal, you might go 200 turnkey and 300 powered shell.
That's right.
It's as the deal sizes have gotten bigger, it kind of enables this function.
Yeah, and when he says 300 powered shell, it's like it could be 5 buildings that handle 60 megawatts each based on the design of the end user. And that's what I was talking about. You really have to for the developers out there, I'm saying this again, but you really have to understand the preferences of the end user today and what they're doing and what they're building. On the consultants and brokers, understanding these structures, I think really helps, being able to explain these and talk about the different financial advantages, disadvantages to each one. And I think on the vendors and the suppliers that are out there, I mean, it's just to understand that your customer for that project, your customer might not be the data center developer, it might be the end user, because they're going to be the ones bringing in their own equipment. And I think certainly there's people that have been supplying UPS systems and generators and cabling to this market for a long time that understand that. But if you're getting into the space from a vendor side of things, or you're supplying the industry with different things, like this is a new model that you kind of answer to someone differently.
Yeah. And it's definitely something we're keeping a very close eye on, just trying to understand those different lease structures, who's doing those deals, where are they being done, and how is it kind of impacting the industry.
Yes.
So something we're keeping a real close eye on.
You bet. Well, Michael, thank you for taking the time to do this. Every once in a while, I get to open and close the podcast, which is really fun.
Yeah.
But if you have any questions, comments, we'd love to hear. Actually, people respond to us quite often about kind of what they're hearing in the space, what they're learning. We love getting feedback on our content and what we're putting out there. So please let us know how we can be helpful. Datacenterhawk.com is our site. Check it out, and we'll see you next time.